Hello folks and welcome to another daily Bitcoin market analysis by Inspocrypto. Today a little bit different because it's going to be different. This time a little bit. We will start with initial comment. Initial comment this time with two topics. Oh yes, it will take hours. So take a seat, take your Coke, take your popcorn. It's going to be exciting. No, I'm kidding. It's not, hopefully, not going to take any hours. So we will talk, first of all, about what happened to the market. Because some people are still clueless what happened. And why Inspocrypto, so my opinion, this rally is an exit liquidity rally or fake rally. And I will show you with data. I'm not going to tell you my opinion anymore, not today, tomorrow. I will show you just the data and make your own coincidence or conclusions about the coincidences we will see there. The second topic, I guess, if you hear this Windows inbox, email inbox signal, I guess it's weather alert indicating, USDC from A to B. However, the second topic we will talk about is BOJ, Bank of Japan, and why Inspocrypto, based on some data, thinks that the Bank of Japan, I don't know if that was their agenda, but created a big trap on equities in the markets for retailers. I will talk about that as well and why I expect that the Bank of Japan will flip its monetary policy as well, and that would cut off the markets from cheap liquidity coming from Asia. We will talk about that today in my initial comment. But first of all, we will start with the first topic, and that's what happened to the market. And let us make a conclusion afterwards, because it's going to be extremely quick. First of all, what you see here is a chart by CryptoQuant. And to be honest, I didn't detect that. That was the CEO of CryptoQuant. When the price started to lift up, he mentioned and tweeted, hey guys, someone is pushing the price up, buying or using 4 billions. Yeah, we are talking about billions, not millions. Billions, 4 billions in futures to push up the price. We have here the trading volume ratio, spot versus derivative. If they use more derivative, so it's clear, this line goes down. If they use more spot instead, the line goes up, right? In general, we can see that the market is more, at least from point of volume, more on the side of futures instead of spot. We know that almost it was at least end of 2021. I've mentioned and tweeted that many times. It was 66% to 70% of the whole daily volume was generated by derivatives and not by spot. For a market where many are expecting that spot is the driver, that's wrong. It's not. It's futures. But however, we will check that, because that's also statistics and we need to check some patterns. So if we take a look here, and let me use, for example, that here, we will find a very interesting coincidence. When they started to push up here, they used more spot. But the big push up was mainly driven by futures. And the very interesting part is here, because they stopped to use then those futures, 4 billions, I guess even more. And then afterwards they started to use even a little bit, so they flipped a little bit, but we are not talking about a lot. However, they used here a combination with spot and derivatives to push up more the price. Since then, it's mainly, or at least the tendency is more spot and less derivatives. However, Still, futures the main driver. We will check that. So if you are able to make simple math, you will see. Let us take, for example, the trading volume ratio here. It was 0.55. So 0.55 is almost one Bitcoin spot volume versus 2 Bitcoin derivatives volume, right? 1.5, 0.5, right? So if we take a look what happened. We dumped to 0.3, indicating 1 Bitcoin spot volume versus 3 Bitcoin derivatives volume, right? That's a lot. So if we take a look here, that's very interesting. And if we check, for example, the date, take a look to the date. That was here, for example, January 18th. Since then, less futures were used to push up the price and more spot, I guess, because they triggered the FOMO. Now let us go to sentiment and let us take a look what happened here, because that's the USDC. If we go, for example, and check here, we will see 18th, right? So usually, and if I zoom out, you will see that yellow and blue was correlating very well, and sometimes we received even much more inflows. For example, here almost 1.9 billion. That was really big, right? Also here, for example, even here that was January 5th, so extremely big. But then look what happened afterwards. Well, you can also see, for example, the supply. That's, for example, the supply here. We have, the total supply here as well. So they minted a lot of money, and afterwards it flipped. So if we check, that was the last bigger yellow line, indicating 322 millions went to centralized exchanges. Just to make another note here, if you send USDC to Binance, they convert automatically those USDC and BUSD. You don't and you can't, something I didn't know before, you can't trade USDC on Binance. So if you send 1.9 billion to Binance, they automatically will swap that in BUSD to use, for example, like they did, to buy spot or futures. However, since here, it flipped completely. Do you see the yellow line here? And look the blue one. Do you see that? So indicating that really someone is pushed the price, and from, I would say, it started January 13th, but the biggest January 18th. Look here, just check the date. How? Holy cow, how is that possible? It's exactly the same date. Like if we check, oh, I forget that. Here, it's exactly the same. They started to take profit here. While we can see that they used less futures and more spot. So if they are cashing out with USDC, and it makes sense to use USDC because you have a unify between USDC and USD on Coinbase. So if you send those USDC on Coinbase, you could swap directly in USD without any problems. So it's simple, fast and cheap, you know? So it makes absolutely sense. And that's, in my opinion, why the whole rally here was just constructed to take profit. And it seems, and it would make sense, that I have retweeted or at least tweeted about that today, about that Grayscale are partly selling assets. So it would make sense to use this opportunity to push up the price artificially with futures, so not really indicating a big demand for the spot, triggering FOMO for retailers. And when you see, and also here I will show you, if we go now to the wallets, and if we take a look, for example, 13th, you remember 13th? Look what retailers are doing here. These guys here started 18th. It's everything retailers, up, 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 up. Declining, declining, declining. Well, they pushed up, but these guys are mainly linked to exchanges, so also here it makes sense. And we have just 4 wallets here. If we go now to the balances, we will see something similar, right? Pushing up, pushing up. Well, these guys, not really. But retailers absorbing. Of course, not huge. I mean, we are not talking about 10 retailers, but it seems enough. And it's just on the data. You know, we don't need just, I don't know, we don't need to listen to any guy saying yeah, that's the new start of a bull run because of what? Give me some data. But they are starting, yeah, because MA200, whatever. It's fine. Everyone has a different approach. I'm just showing you the data behind. It's not a try to convince you. It's just to give you a better view what's happening in the market. In my opinion, that's a matter of time. And this rally will stop. In my opinion, they are distributing at the moment since mid of January, also indicating by big USDC outflows. So let us go to the next chapter. And now we are going to talk about BOJ. I have mentioned today, and I have also showed you, for example, a nice. I need to take that here and to open it here because it's a very nice chart showing you what BOJ did with US dollars. Because they started to sell treasury, USD treasury, for USD to buy the Japanese currency yen. And what happened with that? Well, you can imagine that they sent or they float, can we say that? Flew? The market with liquidity. I mean, the Bank of Japan is not tightening, so they are not hawkish. Absolutely not. So they have a very low interest rate. And, carry trade, you go to Japan if you have the opportunity and the money is available for you in Japan. You can go to Japan, get a credit there, go back to the US and invest this money in gambling, for example. It doesn't matter. You can do that. And that's carry trade. That's what you can do. The problem starts with a conflict of interest. And that's what we are seeing right now. Because the Fed increased their interest rates. And they mention many times, yeah, our economy is doing well, our labor market is doing well, but the monetary policy we did in the last 12 months didn't have the impact we expected. Of course not, because Japan was still supplying cheap money. So today, Atlanta's member of the Fed said, yeah, well, taking into account that the labor market is doing well and the economy is doing well, while we are still below our expectations fighting inflation, we will raise interest rates more. And that's not the problem. The problem is that Japan needs a certain level of USD reserves, because otherwise the trade deficit between US and Japan will overweight hitting to the US. Once again, you remember the discussions about trade deficit? You remember the discussions of Donald Trump and even Biden? That's a big problem for them. Well, you can imagine. So Japan needs a certain level of USD reserves. At the same time, they are unloading their reserves. So they need to stop that. They need, because they can't just unload all what they have in USD. Otherwise, they need to rebuy them back afterwards if they want to make some trades with the US. You know? So that's also simple math. The problem comes now for Japan, because I have mentioned so many times, reward and risk ratio is the key. Always you need to ask you, if I'm going to make this trade, does it going to bring me more reward or a bigger risk? So if a bigger risk, you can just neutralize this risk with a bigger gain. Otherwise, it wouldn't make any sense. You are going to make a trade where you know it's a big, possibility that you will fail and lose money. So the reward has to be bigger. Otherwise, it's not going to work. And that's a problem I see with Japan at the moment. It was a very short-term thinking, in my opinion, because now they have a conflict of interest. They have created a conflict of interest. First of all, the Fed is ignoring BOJ's monetary policy and the carry trades, because of course that explains why equities and the markets went up after October. And the approach of Bank of Japan was, our inflation is rising because the Japanese yen is losing in value. After October, it pushed up, but the inflation is not declining. How is that possible? I can tell you why. Well, you know that inflation, service inflation in the US is one of the main drivers of the inflation in general in the US. And a lot of these services depends on wages. So if the average wage is lifting up, the services are more costly, are more expensive, and that brings inflation up. Any kind of services, the bus driver, the banking agent, whatever. I mean, we are living in a society where I would say almost 70% is pure services. And that's the big problem that Japan has right now. Because Japan has right now the situation where their wages jumped by 4.8% since December 2021. I guess nominal cash earnings for Japan jumped from a year earlier in December. So I guess they mean 2021 or 2022. Oh no, oh my god, they are talking about 2022. So about not even 2 months. That's crazy. And that's what the Labor Ministry in Japan reported Tuesday. So let us just talk a little bit about Japanese industry, because it's well known, in my opinion, a high quality industry as well. But the problem is they have also a big competition coming also from China. If the wages in Japan is going up, that's a big problem on the level of competition, because of course their products are going to push up, but at the same time the service inflation goes up. So inflation in general is going up, and that explains why the yen, even after October, after their intervention, pushed up the inflation as not declining. So the next step is obviously that they need to flip their monetary policy. So they will cut off their liquidity to other markets because no carry trade. It's a process, so it's not like what is going to happen with Binance February 8th, where they cut off and that's it. In that case, it's a transition. So the demand for credits and for liquidity in Japan will decline more and more. And that will have a direct impact to US markets as well. And that's a problem I have mentioned just in the beginning of this chapter. While the Fed is ignoring this fact, indicating they are now discussing to push up more the interest rates because their monetary policy didn't have the impact they expected. And so, of course, now imagine they start to push up more the interest rates, while at the same time, less liquidity is coming to the markets. And that's going to be a huge problem for shadow banks, private equity, hedge funds, and so on and so forth. So they created such kind of the perfect situation for a bubble bust. And if that's going to happen, that's going to be big, really big. And that was a big mistake by the Bank of Japan, in my opinion, because it's not going to fix anything in Japan if they start to have less exports to abroad, and that's happening already, because I can show you, for example, industrial production for last month declined by 0.1%. Previously, they had 0.2%. Industrial production yearly, actual, minus 2.8%. So they are producing less, paying more wages. What can go wrong here? Now imagine, and that's something comes from Japanese culture. I mean, I never have been there, but I guess, because I remember the hard fight that BOJ and the Japanese government has to fight against deflation, because deflation is always extremely hard to fight for central bankers, and that's why they prefer a certain percent of inflation, like, for example, the golden rule of 2%. That's what Powell, what Lagarde always are saying, we need to go back to 2%, because they have a buffer. They can, if they are seeing, the inflation is declining more, they can start to print again. It's easier than if they shift to a deflation. Because a deflation just means I can give you money, but you are not going to consume. You are not going to spend this money. You are in fear and you think, no, I keep this money just in case of, That's the big problem. And that's deflation. I have mentioned just a month ago that I'm still expecting we will shift to a deflation afterwards, and central banks will flip and start to print, and nothing will change because people are in fear, and So in my opinion, that's still on the table. So obviously, when the labor market in Japan will start to show the first weakness, in my opinion, the inflation will decline, but not because the Bank of Japan will start to raise interest rates, something I would expect very soon, but just because the Japanese citizens will shift back to their fear, like they had in the 90s, for example. If that happens, that's of course worst case for the Japanese banks and for the Japanese economy, because they could shift back to a deflation. That's their big nightmare at the moment. So in my opinion, what they did wasn't absolutely smart, while at the same time, well, fighting the monetary policy of the Fed, one of their close allies. So we will see how the whole thing will end, but in my opinion, as soon as the BOJ start to flip to hawkish, that's going to be a big problem for Western markets. We will see that. In my opinion, that's going to happen very soon, because 4.8%, it's really huge for an economy like Japan that, it's one of the export nations like Germany. That's something that never works well. While we know in what conditions and situation the global economy is at the moment. So now we will talk about Bitcoin and what we can figure out. 26 minutes, it's enough. So the wealth ratio. Well, the wealth ratio is declining back to its favorite level of 50 at the moment. Yesterday 54. After we went to 73, that was Saturday, if I'm not that wrong. 73, that was extremely high. And so once again, it seems it bounced here. So it went down, then up again. We will see what's going to happen next. All these explains very well what I have mentioned in my initial comment. And that explains now, of course, why the wealth ratio 30 days moving average maintained such a high level for long time. I mean, we are talking here between January 8th until January 19th. You know, 19th, 18th, you remember 19th. And afterwards, it's declining. It's right now declining. So, we need to see what's going to happen. At the moment, the price is declining. Nothing big, absolutely nothing big. Also, the volume is declining. And I've mentioned it feels like a distribution, a soft distribution where they don't want to let the price down big. And now, of course, it makes a lot of sense. I mean, if, for example, Grayscale is selling, I don't know at what price they bought, to be honest, but of course, I mean, they will try to get a nice price they need, for example, to cover the debts of Genesis. Potentially that would be possible, but anyway, someone is distributing big and using USDC, so it has a connection to Coinbase, and we know that MicroStrategy and Grayscale both are on Coinbase, so it would make sense, absolutely. I mean, everything makes now sense. You are just getting your USDCs from BUSD automatically converted back to USDC, sent to Coinbase, and you will get automatically there your USD and USDC from Coinbase back to Treasury. That's what is happening. It seems that's the whole magic behind. If that's the case, that's not bullish. That's not bullish. I mean, we know they triggered FOMO with the future pump. Is that bullish? We can see that retailers are buying Bitcoins, while big guys are not really huge accumulating. Is that bullish? It's your part now to make any kind of conclusions, if that's bullish or not. So if we go forward, and I don't know why that always happens. So if we take a look, for example, here we can see the Bitcoin price. Oops, that wasn't a good line. Absolutely not. So we can see, for example, here what Bitcoin is doing, and we can see here they let the price go up. That's what they did. That was a little fake pump, and afterwards declined because selling. then let the price go up a little bit again, then let us start to distribute. That's why the price reacted immediately, and now doing exactly the same, so pushed up. And that's what they are doing all the time, and that's where I say that looks like distribution. They stop, let the price go up, they start to sell again. We can see also what's happening to the weights ratio 30 hours moving average. Up, down, down. Usually we went up to 90 and the price started to dump. How many times did I say, hey, as soon as we reach 90, it's time to run? It's not happening. It looks so controlled. So every time when they see, oh, wait, that's too much, the price starts to fall, let us stop now. That's what they are doing. As soon as the demand stops, is where I think the price will go down. But nobody knows when. We can even still go up if we find some whales and retailers that want to push up the price. It's fine. But what I'm seeing always is as soon as they start to push up, even when ISPY and ISPX is pushing up, like just a few minutes ago, the sell pressure starts on Bitcoin. They are distributing. That's what's happening. I'm not saying it's purely retailers buying here. I guess also some whales are doing it. But we know from SP Intelligence, for example, I tweeted about that banks are just taking the exit. For them, reward and risk ratio is not working well related to crypto. Also something you should think about. Because we have so many red flags. Binance, DOJ investigation, even DOJ is at the moment very quiet. Be careful. Nobody knows. It can happen. We have so many red flags there. So we need to be careful. I'm not telling you stop trading. No. But be careful. Always make your reward risk ratio. If you think it makes sense to put your money there, okay. But always have in mind the big risk with all these red flags. At any time, something can happen and the price will go down. And I still think you will not have the opportunity to jump out then, in my opinion. So I would be careful. I'm not saying you shouldn't trade. I'm also not saying that crypto will disappear. That's not what I'm saying. Some people are saying, I thought you are a crypto fan. No, I'm not a crypto fan. I hate crypto. That's why I'm spending 24 hours with crypto. Because I hate it, you know? It's stupid. I love crypto. But to love crypto, you also have to see the negative part of crypto. It's not just moon, bullish, and everything is fine. No, it's not. It's not because of the technology behind crypto. It's about many market actors, toxic market actors, like we had, for example, with Sam and Alameda. And you see, it seems, it wasn't only Sam and Alameda. We are still having some toxic market actors out there. And you remember Dr. Bird, the H-bar guy, the professor? He jumped out from the project. That's really sad, but however, and he said one thing, and he was, in my opinion, he's absolutely right. Such innovations, some revolutions, start and spread a lot of different projects. Many of them nonsense projects. Copy, paste with a new name, a little bit of design in the front end, but the back end is exactly the same crap. Just to absorb money, and many people did that, and many people invested in these projects, and they are still there and make some kind of sideways runs. Then a pump and dump group takes this coin because it's easier to pump them, and so on and so forth. Many projects are exactly that. Nonsense. So, in my opinion, a market crash, a catalyst, is not going to let crypto disappear, because I have mentioned so many times, crypto is part of a political agenda. It's part of a digital transition of the economy, of the industry, and so on and so forth. It's not going to disappear. But we can have a crash like a dot-com bubble, and the dot-com bubble didn't let disappear Microsoft, Google, Facebook, and so on and so forth, right? And I think something similar could happen, but then in a very regulated way. Also something that I think that's the agenda of the ECC. It's just waiting to let the market crash and then come like a hero and say, well, but now we will do it better. It will be absolutely regulated. Nobody will discuss about if Ethereum is a security or Bitcoin a currency and not a security. No. That will be their opportunity to make whatever they want with the market. Afterwards, institutional demand will come. They will jump in again, buying the dip, of course. But in my opinion, that's going to happen. So if you think Inspo is an enemy of crypto, you are totally wrong or just dumb. I don't know. One of them. But I'm not. I'm investing not only in crypto all the time. I'm even going to launch a crypto project with my buddies. So it doesn't make sense to say that I'm anti-crypto. I'm not. But I'm not going to close my eyes. I'm not going to close my ears. And what I'm absolutely surely not going to do is close my mouth. Absolutely not. Let us go to the next one. So once again, we can see here some inflows flat and then one outflow, it seems, accumulating and then sending them out. Almost 4,000 bitcoins today in the morning. If we take a look, for example, that was the last one. Then afterwards we received here 1,700 bitcoins. At the same time, we had an outflow of 1,800 bitcoins. Afterwards, another 450 bitcoins here, another. So they start to distribute, and someone, nobody knows who is behind, if some whales, if I don't think that retailers at the same time are just making coordinated outflows. But it seems also we have someone who is buying. Nobody knows who is behind. But in my opinion, we have more inflows than outflows. Also related to stablecoins at the moment at least. So nothing big happened here. The volume declined a lot. I mean, for today, if we check what was the biggest today, the biggest today was in the midday, just 622 bitcoins. That's really peanuts. But always remember that market actors like the market maker entities are using OTC and futures at the same time. It's not only spot, right? So like they pushed up very hard. If they want to make the next dip, they can drop the price using futures and shorting it, for example. It's also possible. But if they want to distribute, of course, they will try to maintain the price and sell here as soon as they see we have some demand here and people are buying. So if we take a look here now, we can see that also here outflows 57 millions, here 107 millions, 60 millions. We had here at the same time, while 107 millions outflows, 57 millions inflows. So nothing big happened here, absolutely nothing big. At the same time, that was the last time, that was 4 days ago, where we had huge inflows of stable coins, but also outflows. So if we check, that's almost a little bit, I would say a little bit more outflows than inflows, so zero-sum game here. Let us go to the next one. So let us take a look here. First of all, funding rate declined, afterwards pushed up and declining, indicating they're at the moment demanding more shorts. They demanded here more longs, then afterwards declined and demanding more shorts, but at the same time still at 0.01, so still positive. If we take a look now, open interest, open interest looks good to me, so it declined here and afterwards just pushing, and the same happening with leverage ratio. So leverage ratio pushed up, declined a little bit, pushed up, declined, and now pushing up even more than open interest, indicating they are once again using more leverage than open interest, so more volume. If we take a look to derivatives, the maximum 100 million, a little bit more, 101 million peanuts. We remember we had in 2022 sometimes even 600, 700 millions. Not happening anymore. The biggest was here end of January, for example, with almost 300 millions, and that was big enough. And also here related to Bitcoin and derivatives, the biggest was tonight 1,760 Bitcoins inflows, and for example here right now 1,570 Bitcoins outflows. Also here the biggest. You can see what's happening here, indicating a little bit more inflows coming into derivative exchanges than outflows. And also here we can see more outflows, at least in the last 24 hours, a little bit more. So here is the aggregated chart, and we see that the aggregated chart is pushing up an open interest. Leverage ratio, as mentioned, declined and now also pushing, and the funding rate maintains positive. If we take a look, for example here, it declined and now it seems bounced here, indicating they are demanding more longs at the moment. We will see what Blockchain Whispers is indicating us. If we take a look, for example, yesterday they liquidated 665 Bitcoins and longs and 370 Bitcoins and shorts. That's it. We can take a look to Binance. Funding rate doesn't make any sense for me. Well, it makes, indicating they are still demanding more longs, but it's so flat. Something, I don't know, but I think something is wrong there. However, also here confirmed they are using more leverage now than open interest, and that explains a lot why, for example, this purple line is above now, crossed, and is above the open interest. So also on Binance using more leverage than money or open interest. So let us take a look here. Well, that's obviously indicating that almost 60% of the open interest on Binance is on the long side and 40% on the short side. On Ethereum looks once again very healthy. We see that on Bitfinex shorts are rising, not big. We had 20 million, 1.6 millions more, and longs are still 2.4 billions. Why? We still think that this is mainly hedging their spot sells. That's it. Let us take a look to the Kingfisher, my friend, the Kingfisher. Let me check. What do you have here for me? So let us see. Great. So that's all leverage, and all leverage is indicating the next bigger liquidation cluster. Also the liquidation level, or at least a liquidation maximum liquidation cluster or scale, would be 100 millions. Just yesterday it was at 80 million, so it lifted up, indicating we could go up to 23,500 to liquidate the biggest liquidation cluster close to our current price, with 37 millions in liquidation cluster on the short side, not on the long. On the long side, we need to go much more down, hitting 20k, for example. But also here you can see what's happening, right? It looks completely different, absolutely completely different. So we are, just accumulating more longs. High leverage, I think, also on the short side. No, I'm wrong. So if we want to liquidate more high leverage, we need to go between 23 and 23.3. If we want to liquidate close to our current price, we should go down even more, hitting 22.8 and 22.750. So I guess, we will see. I guess we will start to liquidate all this here because it's bigger, but we will see what they are going to do. I don't see the price right now, so I can't tell you. That's it. Let us go to the next chapter. So if we take a look here, for example, we see we are at the moment just touching the level of 23,360. We can see they are using everything. They are really using absolutely everything. And I think once again, algo driven. This time less BUSD, at least it wasn't the trigger. They started to push up the price just before with fiat as well. And we can see here, I need to convert in USD, and we can see that, for example, they are pushing the price with everything. A little bit of spot, and at the same time also with futures, stablecoin futures, for example, 1.1 to almost 400 millions in stablecoin in the last 30 minutes. Not bad, absolutely not bad. Can I also convert in USD? Oh, that's great, didn't know that. Well, that's USD anyway, but convert to USD. Oh, that's great, because then we can see, I guess here, no, here it's not possible, unfortunately. Okay, but we can see now, for example, with fiat, they used almost 10 millions market rates, and BUSD they started here, so -7, 35 millions. Also not big, right? If you are just algo trading, for example, longing it here with almost 400 millions, it's a different dimension, I would say. So if we go forward, that's Binance BUSD, as mentioned just before, and that's the aggregated. Aggregated means we have here different exchanges, including, we can also hear, oh, that's nice. Let us take a look. So we know that convert in USD. Okay, let us convert those here also in USD, and we can see what they are doing. Aggregated from here, where they started to push up, from here they used 50 millions, while at the same time almost 400 millions in derivatives and just stablecoin margin contracts, not even stablecoins. Oh no, I'm sorry. Oh, stablecoin margin contracts are here. Okay, that's the chart, my setup, my mistake. And coin margin contracts are here. So if we take a look here, that here looks very similar to that one, right? While stablecoin margin, it's just pushing the price up, but they weren't really longing just before. So also very interesting. So Binance BTC USDT, also here not indicating anything different. If we take a look, for example, here, look what Bitfinex is doing. Bitfinex is saying, who cares? I don't care. That's really strange, because usually Bitfinex is one, but they don't care. If we take a look, Kraken, of course. And now listen, check Kraken, and we will check later on Gemini. Both, very interesting. If we take a look, Bybit, doing the same like Bitfinex, so who cares? If we take Coinbase, of course, why not? Let us take a look with almost 200 Bitcoins in CBD, so not that big. If we take a look, Bitstamp, of course Bitstamp. Bitstamp is on the board. And look, Gemini, Kraken and Gemini. Oh, let us go back. That's Kraken. That's Gemini. Very similar, right? Well, so yeah, I have showed you here this chart already. Retailers buying more, this guy's also, this guy's not doing anything, declining a little bit, this guy's declining a little bit, this client lifting up, this client's declining. When you see this guy's declining imbalances and this client's receiving, you know, okay, these guys are reducing and shifting to this entity. And this guy's, well, it's just 4 wallets, so nothing big to see here. Yeah, so let me show now. And take a look. For example, what we see here related, sorry, I just was taking a look here. Taking a look, for example, here. And that's BUSD, as we see. And look. Close before, we received 38 millions in BUSD before they pushed up the price. We'll see. That's here USDT. Let us take a look. We received here 70 millions in inflows, but at the same time 64 millions in outflows. So on BUSD only inflows, no outflows. And here, for example, we see once again USDC exchange inflows 52 millions versus exchange outflows 45 millions, right? Close before they started to push up the price. And then here 73 millions exchange outflows and 30 millions exchange inflows. So once again, they push the price, taking profit. Who is doing it? I mean, every time they are pushing up the price, they are selling and taking profit. Every time. For example, they did it here as well. They are using this kind of, well, it was here pump and dump, for example, and so on and so forth, just to take profit. So yeah. We will check a little bit more information, 7 minutes. Let me check. Once again, market maker, 600 Bitcoins, nothing big. They love to use OTC. Funds not doing anything as well. Here, just almost 1,000 Bitcoin since January 19th. Here, as mentioned at the beginning of this video, nothing happening here, also nothing happening here. Market activity declining more and more. Very interesting, Coinbase, very active, and then, boom, Kraken and Binance activity rising while the price is lifting up. And just before, a little bit of OTC close before the price starts to dump. So also here, in my opinion, indicating that these guys are using any kind of little, yeah, you know, pump to sell. And well, today almost 1,000 bitcoins coming from miners. Also interesting, but nothing big. That's it. Let us go to the next chapter. So exchange walls, nothing big. Everything unchanged. The only thing, they removed the wall here 21.5, and the next big one would be here 20,700. Otherwise, you can see they placed here at 24,200. Otherwise, 25k. 25k is still the big wall there. So Bitstamp, let me check. Nothing. Just waiting at 24,600, but absolutely nothing happening here. No. Binance BTC USDT. So on Binance we had a breakout here, then yeah, just started. I'm still once again missing a little bit the retest, but however, I think the price will go down, maybe back to 22,700. We know we have there a gamma wall should work as a support, while 23,500 was actually the gamma resistance. So maybe a little bit more up and then go down. We will see. However, you can see that they are shifting. That's absolutely algo trading what they are doing. Look that. That's crazy. However, 21,500 still very well protected on Binance, and otherwise 25k and 24. Binance BTC BUSD. Yeah, the price is coming down. Once again, it's still very well protected, everything between 22.3 and 22.1 to the upside. Exactly, look that. I mean, exactly happening the same. It's so crazy, and that's both Binance. It's really crazy. So at the moment, protecting a little bit 23.5, 24, and once again 25. It's the biggest. Also very interesting, they removed the 20k and instead they shifted, it seems, to 20,500. Also here the big wall reduced 21,200 as well. Bitfinex BTC USD, nothing to see here, to be honest. Everything is still like we have seen that before, so absolutely nothing happening. OKEX spot, usually nothing to see here. No. OKEX swap still at 17k. Yeah, nothing here. Oh, God, I hate that trading light. Come on. So Kraken here 23,800. Removed liquidity at 25 instead, and they are reinforcing 21.5. Bitget BTC USD, nothing, and BTC USDT, nothing. BitMEX, nothing. Just waiting here 22.5, but that's it. So Binance futures with Tether. Let us take a look here. They removed the wall now at 22,500 and are waiting at 22. Yeah. Now BTC BUSD, also here, removed a lot of liquidity here to the downside, instead pushing a little bit more up, and at the same time we see here, so for example, they are maintaining the price, they are holding it, you can see that here, you know, and pushing up more for longs, and shorts waiting here. So Bitfinex derivatives, 23,466 doesn't look like a flashing order. No, it seems not. 23,400, so makes sense. At the same time, also removed liquidity to the downside. And the next bigger one will be a 21. Kraken futures, nothing. OKEX futures, nothing. And Deribit. Deribit, wow, Deribit. Deribit waiting at 23.8, otherwise here 24.500, otherwise at 25.600, otherwise, and that's the biggest here, 22.1 or 21.800, and so on and so forth, but nothing big. That's it. Yeah, that's it.